Marcus Chen called me in March 2022, right after the market started dropping. He's 29, software engineer in Seattle, makes $140,000 a year. He was panicking. "Should I sell everything?" he asked. "My portfolio's down 23% in 3 weeks." I asked him one question that changed everything. "Marcus, what do you think you own?" He went quiet for 10 seconds. Then he said, "Stocks?" Wrong answer. And that wrong answer almost cost him $180,000. Look, I made the exact same mistake for years. I thought investing was about buying pieces of paper that went up and down based on, I don't know, magic, market sentiment, the Fed. I was completely backwards. Here's what I learned the hard way. You don't own stocks. You own pieces of businesses. Real companies with real customers paying real money for real products. When the market crashed in March 2020, I watched my portfolio drop 35% in 2 weeks. I felt sick. But then I asked myself the same question I asked Marcus. What do I actually own? I owned a piece of Microsoft. Were people suddenly going to stop using Windows, Excel, Azure cloud services? I owned a piece of Costco. Were families going to stop buying groceries in bulk to save money? I owned a piece of Visa. Were people going to stop using credit cards? The businesses hadn't changed, only the prices had changed. That's when I realized most people have their investment philosophy completely backwards. They think they're trading pieces of paper. They're actually buying ownership stakes in the economy. But here's where it gets interesting. Most investors have what I call a renter mentality. They're constantly worried about timing, about getting in and out at the right moment. Renters think month to month. Owners think decade to decade. Marcus had a renter mentality. He was treating his Apple shares like lottery tickets, not like ownership stakes in the most profitable company in human history. So I told him about my neighbor Janet. She's 67, retired teacher. In 1995, she bought $5,000 worth of Coca-Cola stock. One purchase. Never sold a single share. Janet doesn't check stock prices. She doesn't read financial news. She collects her dividend checks every quarter and reinvests them automatically. That $5,000 is worth $47,000 today. Not because Janet is a genius, because she understood what ownership actually means. She owns a piece of a company that sells 1.9 billion servings per day in 200 countries. When people get thirsty, Janet gets paid. Think about that for a second. The average investor switches strategies every 18 months. Janet hasn't changed her strategy in 28 years. Who do you think has more money? Now, what most people don't realize is that your investment philosophy determines everything else. Not just your returns, your stress levels, your sleep quality, your relationship with money. When you have a renter mentality, every market move feels personal. Every red day feels like failure. You're constantly second-guessing yourself. When you have an owner mentality, market volatility becomes opportunity. Red days mean your favorite businesses are on sale. Marcus didn't sell in March 2022. He bought more. Every paycheck, he bought more shares of the same companies he already owned. His philosophy shifted from, how do I time this right, to, how do I own more of businesses I understand? By December 2022, when the market hit bottom, Marcus had accumulated 40% more shares than he started with. When stocks recovered in 2023, those extra shares were worth $180,000 more than his original position. His colleagues who sold in March, they locked in their losses and missed the entire recovery. Same market, same time frame, completely different outcomes. The difference wasn't intelligence, it wasn't luck, it was philosophy. Here's the reframe that changes everything. The stock market isn't a casino where you place bets on random numbers. It's an ownership marketplace where you buy pieces of businesses. When you buy Amazon stock, you become a partial owner of the company that delivers packages to your door. When you buy Disney stock, you own a piece of Mickey Mouse and Marvel and Star Wars. Most people never make this mental shift. They stay renters forever, nervously watching prices bounce around, never understanding what they actually owned. I know. This sounds obvious when I say it out loud. But watch how most people invest. They're chasing hot stocks, timing sectors, following tips from YouTube videos. They're treating ownership like gambling. And yet the richest people in the world got rich by owning businesses, not by trading pieces of paper. Jeff Bezos didn't get rich by day trading Amazon stock. He got rich by owning Amazon and growing the business for 25 years. Warren Buffett didn't get rich by flipping stocks. He got rich by buying great businesses and holding them forever. Okay, so why does this matter for you? Because your investment philosophy determines whether you build wealth or stay broke. It's that simple. If you think like a renter, you'll chase performance, panic during crashes, and switch strategies every time something stops working. You'll spend decades getting nowhere. If you think like an owner, you'll focus on businesses you understand, ignore short-term noise, and get richer while everyone else gets distracted. The data backs this up. The average investor earned 6.8% annually over the past 20 years. The S&P 500 earned 10.7% annually over the same period. Why the difference? Because the average investor can't stop themselves from buying high and selling low. They have a renter mentality. Wild, right? Now, if you're someone who earns a steady paycheck but feels like you're spinning your wheels financially, this is exactly for you. You don't need more income. You need an owner mentality. Stop asking, what stock should I buy? Start asking, what business do I want to own a piece of? Stop asking, when should I sell? Start asking, why would I sell a great business? Stop checking your portfolio every day. Start checking your business's quarterly reports. The goal isn't to time the market. The goal is to own pieces of businesses that generate cash flow for decades. Tonight, before you go to bed, write down 3 businesses you use every day. Companies whose products or services you can't imagine living without. That's your starting point. Your investment philosophy isn't about picking winners. It's about becoming an owner instead of staying a renter forever.